Guys, appreciate your time very much this morning. Good to see you both. Pierre, let's just deal with the stock selling and ask whether or not the shares themselves have sort of escaped the tractor beam of that whole discussion.
Yeah, I think if you look at share movements over the last couple of months, Tesla has lost about 25%. That's actually not much related to Tesla. You look at another high growth name like NVIDIA, the performance has been very similar. So it's more like the broader market getting away from very high growth names that mostly reflects concerns about inflation and to some extent the broader concerns that we've had in recent weeks about the Omicron variant. On what's specific about Tesla, Elon selling, these things have been a lot of the headlines, a lot of the conversations, but I haven't seen that moving the market that much, excepting yesterday, because yesterday, doing the math, listening to Elon's, reading Elon's tweets, you could see that he's probably done selling his stocks, and that created a significant buy signal across the board. So you see now people buying the weakness into Tesla simply on that flag.
Yeah, no, that's been interesting to watch. And then it does allow us, Steve, to get back to a discussion about fundamentals and specifically the competition, whether or not that's the legacy OEMs or Nikola or some of these Chinese names that are saying they've got models that are better than the Y. I wonder how you think that landscape is evolving going into the new year.
Well, you bet. And first on the last question, don't forget, Elon's got a net worth of now roughly $250 billion. So he still has quite a bit of shares left to sell. In terms of competition, here's the big picture. Everybody's realizing the whole world's going electric. Tesla's the clear leader, and they've got a big advantage. The big advantage is not just the name ID, it's that they've now built factories in the US, opening new ones in Austin, Berlin, China. They have a cost down advantage in battery costs, and they have a shipping advantage because they've got production facilities on every major continent. But make no mistake, others are coming at them. I think Volkswagen may be the best position to challenge them, along with the Chinese. Now, for most people, Chinese aren't even in the picture, but China makes over half the world's EVs today. They are the world's largest auto buying market, and they're moving quickly. Also, remember that 67% of the world's batteries are made in China, so they're going to have a cost down edge on some of the other makers. So expect to hear a lot about firms like NIO, Geely, and others. They're coming quickly. It'll be the first time in my life to see Chinese vehicles on American shores, but I think they're going to be just as tough as the Japanese and Korean vehicles were 20 and 30 years ago.
Steve, how big of a pie do you think there is for competition? The reason I ask is because engine number one, historically the activist investor known for shaking things up at Exxon, recently wrote a white paper about electric vehicles, and it noted that there is a world for GM and other incumbents to be very competitive in terms of EVs, and that companies like Tesla and Rivian should be concerned about that. Do you believe there is a place for these incumbents, traditional combustion engine automakers here, or do you think we will be seeing some of the newer players? And does there need to be consolidation in order to compete?
Well, you've asked two or three good questions there. Let me tackle them one at a time. First, the whole world is going electric, and the reason for that is the electric vehicles are not only faster, they're safer, they're more fun to drive, but for the first time in our lives, they're about to become cheaper. And that's because the cost of lithium-ion batteries has gone down 90% in the last decade. What's interesting here is both Herbert Diess at Volkswagen and Elon Musk have said, hey, that's nice, but we're just getting started. We're planning to take the cost down another 50% in the next 3 years. And so the big question here is not who wins the $100,000 car market or the $50,000 car market. It's who's going to win that $25,000 car market. And that's going to be an interesting smackdown between Volkswagen, Tesla, and the Chinese. Those are the three folks I'd look at. GM, Ford are going to have to pick up the pace. It's great to see Ford committing $30 billion to development, but they should have started 5 or 6 years ago. It's going to be a fascinating smackdown. Tesla's going to be on top for a few years to come. We'll see who takes their throne away, if anyone.